United Health Group is moving very fast. I've talked about this stock and this business for ages now. When it was still at $230, it was a steal, and it is now approaching $400. Let's dive into why this is happening and what's happening next. So for today, I want to talk about United Health. This stock is rolling again. The reasons why, the upcoming earnings report at the end of October, what to expect, and what I think will happen next. We'll go through where the stock could go from here, some financial projections, and the bear, bull, and base case scenario for United Health future, as well as my next steps for this company. I have been posting about United Health on my channel and on my X account since May, June, August, especially when the stock bottomed at $230. I have been buying heavily since then. My cost basis currently is roughly $281 a share, and I'm up already 32%. Considering this is just a 3-month position, that is an extraordinary gain, especially for a company that also pays a huge dividend. I'm getting a 3% dividend yield on top of my investment returns from stock appreciation. As always, thank you so much for watching and welcome back to the Value Investor Show. Please subscribe if you're new here. As I said, I will be revealing my full 13 stock portfolio at 10,000 subscribers. United Health traded more than $372 per share yesterday, which is up more than 2% on the day. The stock is up 16% in the past month. And today I want to talk about why this happened. However, year to date, the stock is down 27%, but this is nothing compared to the 50% decline we saw just 3 months ago when the stock was a $200 stock. There's some news about United Health that you need to know about, and we will unravel everything today. Analysts are raising targets again, and the bears have left the chart. I no longer see anyone posting about shorting United Health or calling it a terrible company. It's been a long time since the bear went into hiding, and now everyone is raising price target. On the 8th of October, K-Bank Capital Markets raised its price target for United Health from $350 to $400, while it reiterating an overweight rating. The brokerage cited United Health's strong competitive position in employer and government-sponsored insurance and the growing scale of its Optum business. The same day, Bernstein increased its price target from $379 to $433 and maintained an outperform rating. These upgrades followed a series of positive revisions in September. Wells Fargo upped its target from $267 to $400. Morgan Stanley raised it to $395, Choice to $365, and Barclays to $352. Analysts emphasize that United Health remains a dominant private health insurer with approximately 51 million members worldwide and a diversified revenue base through its Optum Health Services arm. But it's not just them. More analysts are coming out with more price targets. Sanford Bernstein also increased United Health's price target to $433. In a research report issued to clients, the firm presented an outperform rating on the healthcare stock. Several other equity research analysts have also recently issued reports on the stock to buy ratings. It seems like there is a sentiment shift even in Wall Street, and even though I never take into consideration this price target, it just tells you how many times short-term volatility is subject to this price target increases or decreases. But let's get into the important stuff. Mark your calendars, because on October 28th, on a Tuesday, United Health reports their Q3 earnings. In terms of expectations for the full year, analysts now expect an EPS of $16.07, which is down 42% from the $27.6 in fiscal year 2024. However, they do expect EPS to increase 9% the next year to $17.52. So it seems like for the current quarter, for the Q3 earnings, in terms of the expectation, the average earnings estimate is $2.87, which is down 60% year on year, and then $2 for the end of the year, which would be down 70% year on year. So overall, things will get worse before they get better. And I think analysts now understand this. They understand that this year is probably the worst year United Health could have. And from 2026 onwards, we will see increases in the bottom line as well as the top line. I also think that they have already priced this into the stock. They have already priced this downfall into their estimates. And my opinion is that all United Health's management needs to do now is beat their own expectations to show credibility above else. Credibility is the most important factor right now for United Health. If management can't set realistic targets and beat them, it will prove that they can deliver in the future, they can deliver in solving those problems, and even in those tough conditions, because there's still a long way ahead for this business. There's a lot of problems that need to be solved. I'm confident that they can solve it in the next 2-3 years, especially after what happened with V28 and all the pricing challenges. United Health can raise premiums. Ever since the Affordable Care Act was put in place, American insurers have been generally required to spend at least 85% of premiums collected on medical expenses. This means that margins are relatively tight and there isn't much room for error when predicting earnings. A larger than expected utilization rate caused by the company to ultimately drop the lower end of its 2025 earnings outlook from $24.6 a share issued in April down to $14.6 a share when it reported its second quarter results in July. And while there is a chance that cost-cutting measures could lead management to boost its 2025 outlook, this looks like a good stock to buy because of its long-term potential. Another thing to understand is that Americans rarely shop around for better healthcare deals. It's very time-intensive and many don't even have a choice since they're locked into whatever plan their employer selects. So employers have limited options too. That's where United Health brand power and membership scales come in, because it has the largest member base in the US, giving it a competitive advantage to raise prices and still retain most, if not all, of its members. As I said, pricing changes will help mitigate the V28 issue. The V28 was a disaster for United Health, but also for the US healthcare insurance as a whole. V28 made it much more difficult to model to HCC. It removed the ICC codes. They eliminated thousands of code that would eliminate for different illnesses. Before, there were different codes for different conditions. Now they're all the same weighting. This reduced utilization and profit margins for United Health as more people gained access to insurance for illnesses that weren't accounted for under V24. But beyond pricing issues, there is one more important catalyst, and that is the rise of value-based care, which I've talked about in the past. In my opinion, this is United Health's biggest long-term opportunity. The value-based care market is growing at 17% CAGR growth through to 2032, compared to just 5% growth for traditional health insurance. The importance of value-based care lies in the ability to reduce hospital entries. It can cut hospitalizations by 50%, drastically lowering costs for insurance. Value-based care is essentially a preventative care, bending the cost curve effectively while improving margins. This is the best chance for insurers to bend the cost curve. Healthcare insurance is regulated by the government, so at most you make 15% gross margin, which is extremely difficult just as is. So value-based care is the solution to that problem. This is why United Health wanted to buy Amedisys to begin with. They wanted to combine Amedisys and Optum to advance value-based care for patients. The Amedisys acquisition is part of the company's commitment to home care and value-based care. We are committed to those kind of assets and certainly very committed to capabilities where we can serve people in the home, which is super important in terms of the foundational part of value-based care, in terms of how we actually serve them and serve them well, the CFO said. United Health agreed to acquire Amedisys for $3.3 billion. But right after earnings, we will start getting the 13F filings for Q3 2025. Warren Buffett, if you remember, submitted his 13th filing for Q2 in 14th of August, and since then the stock has been on an upward roll. Ever since super investors started buying United Health, sentiment has shifted dramatically. But keep in mind, many of those trades happened before United Health's disappointing Q2 earnings. That means Q3 13F filings will show whether these same super investors were scared of, or if they held or even bought more during the dip at $200. In my opinion, we will see Warren Buffett adding more. There will be a strong upward pressure on the stock, potentially pushing it past $400. But if, on the other hand, Buffett or other super investors are selling, we could see downward pressure and the bears coming back to hammer the stock again. In terms of looking at the bear, base, and bull case scenario, in order to look at the valuation of United Health at today's price, I want to talk you through firstly management guidance. The management maintains a 13 to 16% long-term EPS growth and expecting a return to 10% growth by 2026. So let's dive into the three scenarios. First of all, in terms of the base case, I'm assuming revenue growth of 8%, which is less than the historical growth. And I'm also assuming a net income and free cash flow growth of 13% from 2026 onwards. I have already accommodated for 2025 impact, which I think is a fair base case given the fact it's the lower end of the guidance provided by the management. At the current price of $370 with the DCF and EPS method, I only see a margin of safety of 2 to 30%, which is not ideal. It's not enough for me to once again invest in the stock. But even with the base case assumption, the stock is still undervalued, albeit it depends on how much margin of safety someone is willing to invest. Under my base case, I am assuming that profit margin will get back to roughly 4%, which is not as good as it was back in the day. But this is the current situation that I am assuming under the base case. Now, under the bear case, I have a few different assumptions. Revenue growth at 5%, net income and free cash flow growth at 6%, and that is again from 2026 onwards. So under those assumptions, the company never actually recovers to pre-V28 levels in terms of net income, and profit margin remains at 3%, which is not ideal. And under those assumptions, the margin of safety is basically zero or negative. So under a bear case from this current price, there is no upside for this company, in my opinion. And however, I do think that this is an unlikely scenario. Now for the bull case, we have a different picture here. I am assuming again revenue growth of 9%, but I am assuming a net income and free cash flow growth of 18%. So beating what the management has already suggested, which was 13 to 16%. I am assuming this because I think that in a bull case scenario, the management is expected to swiftly navigate the bottom line, increasing it quite rapidly to more than 4%. And under that case scenario, I am assuming that net income by 2030 could essentially almost double from current prices, from the current situation. And under those assumptions, with the DCF method, I see a margin of safety of 44%. With the EPS method, I see a margin of safety of 21%, which is still less than my target margin of safety of 50%, but it is much more attractive. Now, in terms of what I'm doing next, I do think that it could hit 400. The stock could hit 400 before the end of the year. However, if there is a wider market correction, I wouldn't be surprised if it drops down 300 levels to low 300 levels. But I believe that UNH getting back to the 200s is unlikely unless Warren Buffett has sold his position in Q3, which will drive an enormous downward pressure on the stock. On the other hand, if Warren Buffett has bought United Health, we might see a stock closer to $450, which would be massive. I'm not looking to add more with a cost basis of $218. I'm really happy with the magnitude of my position in my portfolio, but I am keeping a close eye to United Health and will update you as we get closer to earnings week. So if you're new here, subscribe, and I'll see you guys in the next one.